Now you get to hear what he loves to do and his broad-based experience through many cycles, his technical experience. He's going to give us a great presentation on what he feels like is going on in the economy. I bring back Mr. Ted Oakley.
Thank you. Well, I would tell you at the beginning that one thing I've learned about being in the business a long time is I have no idea what's going to happen. And anybody that tells you they do hadn't been around very long. But one of the things I'll try to give you today is just some facts. And you can make your own mind up about what you think. I can tell you what we think. But one of the things is the problem we've had for a long time has been the ECB, Lagarde. You know, what we've got is Jay Powell. They do one thing, then do the other. They really messed the system up, particularly since 2009. And that's been an unfortunate thing. So I'll break this down in 3 sections: the economy, kind of what's going on in the bond market and stock market. But in the economy, I'll start out with this. And this is, if you look at spending, okay, residential spending is the top line. It's gone up a lot higher than the multifamily, but multifamily is at a new high. And one of the things, since I love real estate, so don't take this the wrong way. I think real estate is really one of the last great investments that has all of the aspects of things you want. Unfortunately, there's nothing else that has that. But real estate does, but one of the things we're finding today, because I invest in it and I own a bank, is that it's crowded. And a lot of people are in the market that don't know what they're doing. And one of the things that's coming out of that is we're getting a lot of building going on. Now, if you look at pending home sales, they obviously hit a new low, and they're back to where they were in 2020. And a lot of people tell me, well, that's because we don't have any supply. We don't have any supply. And I said, well, if you have a poor economy, I don't care if you have a 3% interest rate or a 4% interest rate, you still have to make the payment, okay? So one of those people loses their job, and that's what's happening now, some of those, especially in tech. If one loses their job, we're in trouble. And I've seen a lot of this group get more house than they probably wanted. You know, 30-year mortgage rate obviously just hit a new high, which you didn't think you'd probably see. And if you look at the difference between the purchase-only price of a house on the top line and average earnings hourly on the red line, those two eventually come together. Now, it probably will be some of both. If you see all the strikes going on now, hourly earnings probably go up, but more than likely, prices settle off, you know, in time. So that's what we're seeing. And I think this is the biggest thing right now. If you look at the difference between a house payment, this does not include taxes and insurance, by the way. If you look at the difference between 3 years ago and now, that's an incredible amount to have to pay, and you tack on, I'm sure all of where you live, you're like us in Austin, your taxes are going up, and your insurance is going up. So all the way around, it's affecting it. The other thing that's going on right now, and people have really pushed us into this situation, is that if you look at our oil supplies, they're going down. And we used up all of our strategic supplies, unfortunately. Didn't need to. There was a political move, and it shouldn't have happened, but it did. And one of the things that's caused is that we put pressure on drilling companies, and you'll see that blue line. Our rig count's not any higher than it was. That's another thing that affects the economy. So I want to talk to you a little bit about bankruptcies, and they go up this will be the biggest year of bankruptcies, by the way, since 2010, 9 and 10. And I added one that might be in your area. Smile Direct went bankrupt Monday. And I'm sure you all know about them, okay? And it's interesting, because I feel the same way you do. I see these big marketing machines, and they don't really take care of people. I see it just in all facets, not including that. But see, all of these things have a lot of people, and those people want to have a job. And I hear this all the time, is the consumer strong? And I say, no, they're not that strong. One of the benefits of living all 3 socioeconomic levels, which I have, is you know about people on the low end. You know what they're thinking. You can talk to them, and you real quickly figure it out. You'll see this is just month to month, August to September. You look at all of these things in here and the negatives that are coming through on that. That's where we are in the picture right now. Now, this is something you probably don't think about, but all of these programs have either finished in the last 6 months or they're finishing right now, okay? And there's a lot of things in here, but you'll see some things that, for example, if you look at the ERC Employment Retention Credit, all of you probably got calls on that. You know, it's a sham deal, by the way, from the government. But a lot of this stuff is all leaving now. And that was all money into the system, money, money, money. That's not there anymore. And then you'll see, especially now that this upheaval in one of the parties, probably maybe have a government shutdown, got the strike still going on. I noticed where Kaiser Permanente went on strike. I mean, that's what's happening right now. These things you probably don't think about, but if you look at August of this year, these are utility shutoff rates nationally, okay? You got to look at little things that cause people to do things. If you have 12% of the population that's getting their utilities cut off, they're hurting. I can just tell you that. And it's been climbing as we went along. And so we always look at little things like that as we go along. The other thing that happened is you hear a lot about money in the system. And you'll see when we get to the fourth quarter of this year, basically all of the excess savings that came from that big money push in 20 and 21, they're all gone, okay? And people say, well, you know, I go into airports and a lot of people flying, you know, I go to resorts, different things. I've done a lot of asking of questions about this that people are there, and this is my answer to it. They say, I don't have the money to buy a new house, and I don't have money to buy a new car, but I've got a little bit of money, and I'll put some on a credit card, so we're just going to go do something fun. And it's sort of like that last bastion of you're on a drunk, and you say, I want to have a couple of more. I'm right at the end of it before you get feeling bad. Soon about it? Well, that's where they are right now. And you'll notice this was the excess money that went in. All that blue line up there in the top, see all that money that went in? Well, that's gone now, okay? And now we're going back to this. We're going back to credit cards, okay? These are credit card delinquency rates. You'll notice how when all the money was coming in, 2021, they were real low because they had free money. Now they're going back up, just hit a new high. Nobody's going to tell you that in the press, by the way. And this is something that's interesting to me. The average credit card rate on the graph on the right side is over 22%. And yet people keep on borrowing. I'm telling you where we are right now. Now this one on the bottom is mine. I don't have any balances, but I thought it was interesting. So I was looking at the back of my American Express card, and I never charge anything. I'm going to leave it on there, but I thought, now that's interesting. That's an APR, annual percentage rate, of 29.99. They didn't have the guts to put 30, so they put 29.99. But think about that. You know, and I always love our Congress and the people in these positions. We really want to take care of the little people. Well, thank you very much. You know, it's that kind of thing. But that's where we're headed. And the other place is that these companies are starting to get a lot of theft. And I know people in leadership positions won't talk about it, but it's becoming a real problem. And you'll notice, to be politically correct, if you listen on any calls on public corporations, what they say is they use the word theft. These people are stealing from me. Shrinkage. It's all shrinkage, you know, and it's that PC part. You'll find me to be a big, big cynic on public companies. I've been around them too long in my life to believe many of them, but I know how to invest in them and what to look for, but that's one of the problems you have with them. And the last thing is that we don't own a lot of gold, really. I think it's not a cash flow investment, so it's hard It's hard to own a lot of it, really, because you don't get any cash flow from it. And if it doesn't go up, So it's not our, what we think is a classic great investment, but we probably do own about 2% of it just as a sort of a currency hedge. I do think that's where we're going, to a little different currency, but that's sort of where we are in the economy.